Let's get started labeling the inputs and outputs of each of these manufacturing T accounts, beginning with raw materials. Raw materials is an asset, so it increases with a debit and decreases with a credit, and it is going to have beginning balances and ending balances on the normal side. Raw materials increases with materials purchased. Materials purchased can either be direct materials or indirect materials. Both of those are added on the debit side to raw materials. We subtract from raw materials when we use materials. When we use direct materials, those amounts are transferred into work in process. And when we use indirect materials, those amounts are subtracted from raw materials and transferred into manufacturing overhead. Now we have completed the raw materials T account. Now let's complete the manufacturing overhead T account. We've already accounted for indirect materials used. Now let's add our other components of manufacturing overhead, which are indirect labor and other manufacturing overhead, which are items like depreciation and utilities on the plant. We record our actual overhead costs as debits to overhead, and we subtract from overhead when we allocate overhead. And when we allocate overhead, those allocated costs get moved to work in process. Now let's complete the work in process T account. Just like raw materials, work in process will have a beginning balance and an ending balance on the debit side, which is the normal side, because this account increases with a debit and decreases with a credit. Work in process is where all of the product costs accumulate. So we already have direct materials and overhead, so we just need to add the last of our product costs, which is direct labor. Now we have listed all of our inputs into the work in process T account, but what about our outputs? We remove costs from work in process as we complete items. So the cost of all the items that we complete is called cost of goods manufactured, and that is what is removed from the work in process account as we complete items. Now let's complete the finished goods T account. Just like the raw materials and work in process T accounts, the finished goods T account will have a beginning balance and an ending balance on the debit side, which is the normal side. We remove costs from finished goods as our items are sold. The total cost associated with all of the items that we sold during a period is called cost of goods sold. Those costs are removed from the finished goods T account, but are then moved into the cost of goods sold expense account. This completes our diagram of the flow of costs through the manufacturing T accounts. So as you look at this diagram, I want you to remember that the costs start on the left-hand side and work their way to the right until ultimately all of the costs end up on the income statement as part of cost of goods sold.